Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel where we do mostly the top-down analysis of different financial securities. And today I'm going to be looking at the DERIV synthetic index volatility 101S index. And I'm currently on the monthly time frame. As you all know, I do my analysis using pure price action trading strategy. So on the monthly time frame, we try to predict direction of the market or try to get our directional bias. We also, as much as we can, try to get our key zones. So if you're just merely looking at the chart, you can see that this particular asset has been moving downwards for quite some time. So we see the market making lower low, lower high, lower low, lower high. It made equal lows here, tried to push up, but this did not come to fruition, and the market ended up giving us a new low, a lower high, a lower low, lower high, and this is where I want us to concentrate because in as much as the market gave a lower high, it failed to create a new low. So if we look at what's happening here, the market gave us a lower high. So instead of giving us a lower low, it ended up giving us equal lows. And since that happened, we saw that the market started pushing upwards. Now, what do I mean? You can see that in the last 1, 2, 3, 4 months, the price of the market has been pushing upwards. However, one thing that I want us to understand is that in as much as the market pushed upwards, we can see that in this last month, or this most recent month of October, the market pushed as high as this level, but sellers are currently pushing the market downwards. Now, why am I saying this? The presence of this potential higher low instead of a lower low and the upward movement of the market indicates that prices that buyers are trying to push the market upwards. So that makes us think that, okay, this particular asset wants to start moving the upward direction. However, because sellers have been pushing price downwards this month, giving us this particular candle with a wick upwards, also would want to indicate that sellers are now in control of the market. So this distorts our directional bias for now. So the best thing we can do would be to go and say the structure of the market in the next lower time frame to see if we can get a clearer picture of the market. So we'll go to the weekly time frame. Now on the weekly time frame, although mostly what we try to do is to get like structure of the market to work with or a chart pattern to work with, we can also try to clarify our initial directional bias. Now, because we couldn't conclude on direction in the first place, we can now use the structure that we have before us to get the direction of the market. Now, the first thing that I might like to do would be to see that this was the bottom that we saw, the almost equal bottom that we saw from the monthly time frame. And if we are to analyze closely this part of the chart, you can see that the market was making lower low, made a lower low, lower high, lower low, went into a range for a bit. And then if we look at this part of the chart, this was where the market went into a leading range. So the market just broke out of this range to give us what's like a new high. So if we are to concentrate on this part of the chart, you can see that though the market was making lower lows and lower high, ranged a bit, it just created a new high. And what the market is doing now is like a retracement back into this range. So the question is, how far do we think this retracement would go? So as we go further with the analysis, we might find out along the way. But currently, what I would say is that the market has just given us a new high, breaking out from this range, and price is currently retracing back into the range. But however, if we look close, we can see that within the range, we have what? A double bottom. If we go to the line chart, remember I said on the monthly time frame, we try to look for like a pattern, a chart pattern, or whatever it is to work with. We had a double bottom here as a result of this range. So this bottom, and this was a neckline. So price actually broke out of this bottom made a retest and has given us a new high. So the question would now be, what structure of the market will I be working with? Now, if we go back to the line chart and I zoom in, we have like the simple bullish structure. Now, what do I mean by the simple bullish structure? It means when the market gives us a higher low, it goes up to give a higher high, and then we expect a retracement. Now, the retracement might be as deep as coming to give us what? A double bottom, but it might end up here around this area where we have the first high. So when price gets here, it moves up. Price can always come down until there's a change of structure within all this place or change of character, then the setup still remains valid. So if we compare this to what we have here, so price made a lower high here and pushed upwards to give us what? A new high, and then price is currently retracing. So this now tells me that that the direction of this market or this trend of the market that I'll be working with would be what? The bullish trend. So I can even place here. So I have one touch of the trend line, another touch, and we have like potential third touch happening or likely to happen depending on what happens as we go further down to the much lower time frame. So what do we do next? Now having a structure of the market to work with, the next best thing to do would be to go towards the daily time frame, where I believe we'll now have much more picture of a much more clearer picture of the market. Now, if I go back to the line chart again, we can see the double bottom that we saw from the weekly time frame now much more pronounced. So, and of course, we know that the rule for trading double bottom is that once we have the left side of the bottom, the right side of the bottom, the neckline is broken. Once the neckline is broken, wait for what? A retest of the neckline. Like I always say, this retest might go beyond this neckline into the area that has the bottom. Then once we notice a change of character, a change of structure, then we can start looking for what? Our buy trade. So we can compare this with the structure that we have before us. So we have a trend line, we have a double bottom, and price broke out of this bottom and went a long way up. However, what we're seeing now is price retracing back into the area, and it might come down to this neckline where if that happens, or if that happens, it will be making what? A third touch of this trend line, as well as a um a retracement back to the neckline of the double bottom. So that gives us like a double edge or a double confluence looking at this particular market. And in another event, because of the momentum of with which this downward movement of price is happening, price could as well just break through this whole structure, which I feel would be highly unlikely, and continue downwards. But for now, my take would be that price is coming down into this area and would likely continue in the upward direction. So if it continues in the upward direction, where do I think would be our target? Our target would be this level. So my prediction or my thinking, my line of thought is that price is going to come here and then move back upwards to probably give us a new high. So the question now arises, now that we have this kind of setup, how do we take advantage of it? Well, for those of us that have been following my analysis, you know that I try to use as much confluence as possible to give me confidence when it comes to finally taking my trade. Now, I use three basic tools when it comes to analysis: support or resistance zone, which like I already have here with price breaking out of this range, then my trend line, as well as the Fibonacci retracement tool. So now if we see the Fib tool, we can see that even though price is breaking out of the what I always call the Fibonacci retracement golden zone, which is the 50 zone between the 50% and 61.8%, we can see clearly that the neckline of the double bottom is aligning with the 78.2% mark of the Fibonacci retracement golden zone. So this still further gives me much more confidence that this area would likely hold price or support price from going downwards. So like I said, how do I take advantage of this particular setup? All I need to do is to wait. Remember, I always preach patience when it comes to trading. So all we need to do now is to wait for price to get into this area. And when price does that, we can go to the much lower time frame, starting maybe from the H4 and or probably to even the H1 time frame. You can include your counter trend line here. So it's a very simple method of trading. Your counter trend line, you can see that price has been coming down, making lower lows and lower highs. So if this continues to happen, the event that price gets into this area, then we can wait for a break of this, a complete break of this trend line. Once there's a retest, then we can start looking for our buying opportunities. Now, the point is, this is the double bottom, still very, very clear here on the H4 time frame. This is the neckline of the double bottom. Price broke out of it. Price is making lower lows and lower highs. Coming where towards this bottom, we have the bottom aligning with the 78.2% mark of the Fibonacci retracement tool. We have a trend line likely to give us a potential third touch. So putting all this confluence together, it's enough to tell us that we are on the right track in expecting that price would go up if all these is out. And just like I said, the simple method you can use to take your trade would be to wait for this H4 trend line to be broken and retested. You can even go to the much lower time frames to refine your entries so that you can have a much more smaller stop loss. So this is my take for the DERIV synthetic index volatility 100 index. So if you're into the trading of these assets, you can compare this with your analysis and drop your thoughts in the comment section. Don't also forget to like, and if you've not subscribed and you believe that this analysis is of any value to you, then you can click on the subscribe button for subsequent videos like this. If you're not into the trading of DERIV synthetic indices and you want to try it out, I'll be dropping a link in the description below where you can register. It is very fast and easy, and I can assure you it's something that you would not regret doing. So thanks again for stopping by my channel. You can stay tuned for subsequent videos. I have a free signal telegram channel also attached to the description. So if you want to see how we drop trading signals from time to time on the channel, you can join that as well. So do enjoy the rest of your trading day, and thanks.